So that's the conversation I'll be having with Jubril Karim, who is an energy analyst with EcoBank. We're talking to us about this, giving us his thoughts and, of course, expectations from the market. Jubril, good morning to you. Thank you so much for joining me on the program.
Good morning. Thank you for having me.
So what do you make of this forecast by the World Bank? Do you think it will be realized?
Well, I think it's quite realizable target, and even a conservative one at that. Because if we look at the previous outlook for 2017, it was $53 per barrel, and they just raised it by $2 per barrel to $5 per barrel. And this is likely due to their anticipation of the implementation of the OPEC cut of crude oil production at current level at about 32.5 million barrels per day to 33 million barrels per day. And if you look at what other houses have been saying about expectation for crude oil price in 2017, if the OPEC deal is properly implemented, I think even the World Bank outlook is quite conservative for the current outlook in the market.
Yeah, I'm tempted to actually agree with you on that one, especially since we know that most of these major oil producers are still having issues trying to balance out. You still have the issue of oversupply in the market. As of this morning, we're seeing oil prices hovering around $51 per barrel, and that has, been topsy-turvy between $50 and between $55 per barrel. How much do you think going forward, and as you know, the markets actually wait for the outcome of the meeting, do you think that the price will remain around 51, or do you expect it for it to drop as investors take cautionary stands towards this commodity?
Well, I think up until November, when that meeting will take place, we are most likely going to see oil price continue to revolve around this current level. But depending on what was the situation leading up to the meeting, will actually determine the direction of oil price. If the expectation is that all the different factors that will be put into the deal will be agreed upon by all parties, it is most likely that even before the deal is struck on the particular day, we will most likely see a significant uptrend in oil price. But if contrary is the situation, that there's a lot of doubt, most especially on the part of Saudi Arabia and as well as other non-OPEC member countries that have significant interest in pegging production as well, then we might begin to see oil price move in the other direction. But for me, I think as we approach that day, we will begin to see a much clearer image of where oil price will trend.
Now, for the commodity-dependent countries like Nigeria, how would this development shape our expectations from oil earnings?
Well, I think if you take Nigeria in particular, what Nigeria needs to focus right now is not so much about what oil price is trading, but about restoring production to level that it was maybe let's say about the middle of 2015. If we're getting close to or just above 2 million barrels per day, then Nigeria might be okay at current oil price. But given the current level of production and output that has been impeded by the action of Niger Delta militants, including Focados that we're expecting to be back online very soon, there is really not so much positive coming from any increase in oil price for countries like Nigeria. But if you take countries like Venezuela, for instance, where production is still quite at high level, but prices are not very favorable. If price continue to improve at this level, then it will be positive for the country. But for Nigeria, most of the focus should be about production level right now.
So even though the NNPC says that they're reducing the selling price of every type of crude it gives, that's mostly Kwaibo and Burning Light, you don't think in any way that this is, a bright light in a dark cloud?
Well, it's even too contrary, actually. If you look at why the NNPC is lowering the price of Nigerian crude available in the market, is due to the fact that there is a lot of overhang, there's a lot of cargoes that have not been sold, and they believe that due to the fact that Nigerian crude are quite pricey, given the current market condition and the high level of competition in the market. So that's what prompted them to lower the prices. And this is due to the fact that if you look at countries where Nigerian crude usually head, in Southeast Asia, there is a lot of competition coming up there now from Iran. So it is quite it's quite very good on the part of the NNPC to lower the price of crude, and it even showed that the Nigerian heavy dependence on crude right now is not going to be very sustainable in the long run, as a lot of other countries continue to pump more oil. If Iran hits its target of about close to 4 million barrels before the end of 2017, we might see competition for Nigerian crude gets even higher, tougher than it is currently.
Jubril, give us a sense of how much crude we've got on ground. How many cargoes are waiting for export?
Well, on a monthly basis, Nigeria usually puts about between 50 to 60 cargoes in the market, and due to the activities of the Nigerian Delta militant, we see that trend downwards from a high of about 63 cargoes earlier in the year to current level of close to 50, or even sometimes below 50. So, but usually most of these cargoes are usually available for sale long before the months in which they will be shipped. So you will find that we will probably have November cargoes already in the market. So most of this cargo is not the fact that they are already due and are not shipping. It's the fact that the expectation that most of these cargoes will be sold before even they are due for shipping is not being realized.
Well, as it is, the market, the oil market is a very volatile one right now. Investors are quite, they're tiptoeing, if you ask me, around most of the issues. But in the coming days, and as most marketers, most commodity watchers, and even countries count down to OPEC's meeting, what do you expect? Do you expect to see the prices continue to hover around the level of $50 to $55 per barrel?
Well, I think 50 to 55 might be a quite high band. So I'm thinking we'll continue to see oil price revolve around between $49 to about $52, $53 per barrel up until November. Then, depending on what the outcome of the OPEC meeting will be in November, we'll either see a sharp upward trend or downward trend in the price of oil.
Jubril Karim, energy analyst with EcoBank, thank you so much for joining me this morning, of course, sharing your perspectives with us on some of those issues. Of course, so in the coming days, most of the traders and, of course, market watchers are anticipating what will be decided when the Organization of Petroleum Exporting Countries has its next meeting. That's sometime in a couple of weeks. And at the moment, oil prices continue to trend around $50 and $55 per barrel. In the last couple of weeks, we've seen that being an exciting piece of news, especially as oil has actually hit rock bottom of below $40 per barrel. And for a country like Nigeria, that's our major exporting chip. That's one issue that they continue to keep their eye on. And so if the NNPC says that at this time they're actually going to be reducing the selling price of its major cargoes, Akwa Ibom and Bonny Light, we should know that it's something to worry about. But of course, they've got a game plan to make sure that that brings up more revenue. But Business Morning will continue in just a moment. We've got another issue that we've got our teeth in, so you can join us again.